Welcome to Working Dad Trader. In this video, I'm going to show you my Trading 212 portfolio. And you're going to see how a beginner like me with no trading experience has done since April. If you like these videos, please give me a like. And if you want to be like Night Elf 88 and subscribe, that'd be fantastic because it's supporting my channel. So let's have a look. So if we go now and look onto how each stock's doing, I should talk through my portfolio. So my first one is AGNC Investment. They're basically a retail investment trust. I picked that one because they pay good dividends. They pay about 10.16% dividend yield, and they pay dividends monthly. So that was just purely because it was a good dividend investment stock to generate some dividends. That was the only reason why I bought that stock. Alibaba, if people don't know, is a Chinese company. They are like the Chinese version of Amazon. Huge company in China. At the time I bought them, they were quite cheap compared to, say, Amazon. I only hold half a share, but as you can see, I'm nearly 40% up in Alibaba. To be fair, I wish I bought a lot more at the time. If we go onto the yearly screen, I got them when they were quite low and they've gone up massively. But I've had my 212 account since April, and slowly built it up every month, putting money in. So at the time I wish I had put a lot more in, but obviously you can never look back. Okay. And the next one obviously is Amazon. With Amazon, Amazon's a monster of a company and it's going to be around forever. Not forever, but it's going to be around for a long time. They've obviously done extremely well during the lockdown situation, and I believe that this going into this Christmas period, they're also going to be really busy where the high street's going to get devastated. People are just going to be buying online. To buy one stock is massive. I mean, it's like $3,185 just for one stock. I only hold a very small percentage of my stocks. As you can see, 0.053 of a share. And again, really, I just wanted to be part of Amazon for the future because I think they're going to go up again. I can see Amazon going to 4,000 easily. But as you can see, I got them quite high. I wish I got them back in April where they were a lot lower. In April, they were 1906, so 1906 roughly back in April, so I was pretty slow on getting into Amazon. Then I just have the normal companies like American Express, which I hold just over half a share of American Express. I looked at American Express, Visa, MasterCard, and at the time I felt American Express had more to recover from when I got into American Express. If we see on the yearly chart, I got American Express when they were quite low at the bottom after the crash from the sort of lockdown crisis situation. Okay. Then next stock, I've got 6 shares in Athira. They are a Canadian-based cannabis company. I wanted some exposure to that because I think going forward in the future, as more and more countries legalize cannabis. I can only see that sector getting stronger, and the companies that are already suppliers of cannabis to shops getting bigger and bigger. Looking at a lot of the cannabis companies, I felt they were one of the stronger ones in the market. There's only a couple of states in the US so far that it's legalized to buy cannabis. That's under review, and depending on who becomes the next president, it might change. And if America opens its doors and legalizes it completely, then I think a company like that is just going to explode, and I can expect my shares to go shooting up. So that's why I wanted to get into that. AT&T is basically the American equivalent of BT. I mean, on that stock, I am down 8%. At the moment, I'm not too worried. I only held just over a share. They're quite good at dividend paying as well. I still believe AT&T are undervalued, so that's why I bought it. They're quite a strong company, so at the moment I'm not too concerned. Canadian Solar was another one I got into. Again, I wish I bought a lot more of Canadian Solar. Obviously, they're a big company that do solar panels. A lot of my portfolio, I've tried to look at sort of future renewable energy, renewable sources, cleaner type companies. I try to get a bit of that into my portfolio. So Canadian Solar ticked that box. And again, they're doing very well. I've just ordered just a share, and they're 40% up, so they're doing fantastic. Another one was Cisco Systems, which is slightly down. It's just another technology type stock that I looked at, which it looked like a undervalued company. One of the companies that haven't really bounced back from the drop. They sort of came up then and went back down again. So I just feel, it's just my own personal opinion, that they are undervalued and they got a lot more growth to go. So that's why I bought a small stake in Cisco, hoping that they can get back to their sort of 45s, 48 range, and make some good returns on that one. My next on my portfolio is Coca-Cola. Only just making a profit on that one of 2.8%. Everyone knows Coca-Cola. It's a good solid stock, massive worldwide company. Only own just over a share of that one, but again, they pay good dividends, so that's why I also bought that one. The next one is Consolidated Water. That was one, again, just a small stake in that company. Again, with a look going forward of a more sort of greener world. That company deals a lot in making seawater into drinkable water. So they've got facilities as the world is getting warmer and water resources are running out across the world. There's a lot of studies and there have been a lot of programs on the shortage of water, and some big cities across the world have been struggling for water consumption as the population is getting bigger in the world. This company is doing a lot into turning seawater into drinking water, so that's why I bought a small stake in that company. CVS Health. It's just a massive company in the US to do with healthcare. They cover a lot of things within healthcare. Good, strong company. Again, I've only bought a small stake in that company at the moment. It's just trying to diverse my portfolio is why I wanted to get a little bit into the health sector. Facebook, obviously everyone knows Facebook. That's one that I did do quite well on early on and got in straight away when I started my portfolio in April. Um, Again, I didn't have the money at the time, but I wish I put an awful lot more money in Facebook. So I got in reasonably near the bottom, not quite at the bottom, but fairly close to the bottom. Again, Facebook is just going to grow and grow. We all use Facebook, and they're going to be around for many years to come, and their share price will just go up and up and up, I'm sure, over the long term. So that's definitely a growth stock for me. Intel was another technology stock at the time. I bought a small stake in just because I felt it was undervalued. I only owned a small stake of that one, 0.27. It's only about 5% up. iRobot was another one for the sort of future. I was looking into how our world's going to change. There's going to be a lot more robots and AI devices doing things in the future. They're again a big, strong iRobot AI sort of company in that they've already got lots of products out there. Again, it's one for the future that I hope will grow within the next sort of 5 years. Obviously, I'm a long-term investor, so that's why I invested in companies now, which I thought are reasonably cheap and hopefully going to grow to be bigger as our technology changes. I've also got obviously an ETF, which is the iShares Global Clean Energy. Again, with my thoughts of trying to be more green and more environmental friendly, I wanted to have a stake in that, which that's doing quite well. I got that at quite a good price, so I was happy to get on there. With that, I had 3.4 shares. Magna International, I bought one share. Magna International are a massive international company that operate all four corners of the world. They help big car companies by providing, they build the chassis, they do into the technology. They've got a lot of big contracts with a lot of companies like General Motors, Jaguar, by building Toyota, by building the chassis and the technology, and they're big into electric cars, and they're going to help build stuff like that. So again, I can see them getting bigger and getting bigger contracts with, especially with the way that cars are going electric. They're already very advanced on that, and that's why I bought into that share. PayPoint was more of a speculative purchase, to be honest. PayPoint is a massive UK company. People still use PayPoint for their electric and gas supplies. PayPoint dropped quite a bit, so I got it. I tried to get it quite low, and it's sort of, I feel it was undervalued and it should rebound. If we look at it on the yearly chart, it has dropped quite a bit from where it was a year ago. It's sort of down nearly 45%. So again, it's a small stake in that one, and I'm just hoping that it will rebound up to closer to where it was a year ago over time. Could be completely wrong with that one, but we will see. The next one was PNC Financial Services, that I bought a very small stake in because it's quite an expensive stock. They're a big American financial service bank. I looked into that company, and really the only reason, if I'm honest, why I even bought any stake in that company, because I was doing research into the banking sector, and because I wanted some exposure into the banks as well, was simply because Warren Buffett invested into it. I think that's what made my mind up. If Warren Buffett is buying some stake in it, then I would buy some stake in it. Probably that was a mistake, and maybe I will learn from that, but you never know. Obviously I'm going to keep it for a long time yet, so it might turn good, but at the minute it's nearly 10% down, so it's still got a lot of recovery to do. So maybe I can learn from that as a mistake, or maybe it turned out good. We'll see. But at the moment I'm not too worried, because I'm going to keep it for a while. The next one would be StoneCo. They are sort of the equivalent of PayPal of South America. PayPal, obviously everyone uses PayPal across the world, but I thought they were quite high. This is a slightly smaller company, which when I got into StoneCo, I thought they were undervalued, so I bought a very small, not even half a share in StoneCo, and at present I'm nearly 20% up, so I'm quite happy with that pick. Cisco, I bought just over a share, massive food sort of manufacturing and delivery company in the US. That company's taken a while. When I bought it, it plummeted for a while. They haven't done so well under the current world situation, and they took a long time to recover. But I think now, as the US economy's got going again, and they've started getting their delivery orders back out there again and making food, that they have recovered. But they're a huge company, and again I'm hoping they get back to the sort of $85 a share sort of level. I think in the long term they will, but when that will be, who knows. The next one on my list would be Tencent Music Entertainment. I currently owed 2 shares pretty much of Tencent. If anyone doesn't know who Tencent is, they're again another Chinese company. They're like the equivalent of Facebook, Twitter, YouTube, and music type apps all under one sort of banner. They're massive in the States. In China. Again, depending on what happens in America with stopping Chinese companies trying to operate over there, I think that's why probably they're down. But again, that might change depending on who will become the next president. Twitter, everyone knows, is probably my best performing company. I got into Twitter again early on in April. It's one of my best buys. I got them fairly near the bottom, and they've done extremely well for me. Again, in hindsight, you probably could have bought more. I only bought 2 shares at the time, but they're 66% up, which is fantastic, so I'm really happy with that. On to the next one, which is Union Pacific. Union Pacific are, again, a US company. They are a massive railroad company in America, and they go into Canada. It's all freight that they transport around the US and Canada. So all the goods and coal and all sorts of things, they're just a massive freight company. It's one of those companies that I found it difficult to buy more of, because they're a massive company, and they never really had much of a drop under the current situation. Well, they did, but I got into them quite late, and they just keep going up and up and up. It's a company that I'm quite bullish on, and I'd love to get a lot more shares into this company. And again, they do pay dividends, so it's a company that I'm always looking for dips to try and get into. And I'm very happy to hold that company for a long time. I've got a little bit of the Vanguard SP500 ETF, about half a share. I just held that just to keep as a sort of safe holding, really, to keep my portfolio as it was one of the safer options. So I've got a very small stake in that. And the last one is Walt Disney. Walt Disney, just under half a share. They've struggled a lot, obviously, with the parks being closed for most of the year under the world situation. But their online TV, Disney Plus, that they've launched has done quite well, and I can see only that growing and matching someone like Netflix, sorry. Eventually, hopefully, when the parks reopen as well, then that company stock price will go up again around the 150, 160. So I'm quite happy to hold Walt Disney. That I got them fairly near the bottom, so I'm quite relaxed about Walt Disney. And again, it's a long-term hold, so I can only see that going up and up in the future. So that's generally my 25 stocks. If we look at overall my portfolio, if we look on the year, as you can see at the minute, I'm 16% up. It's been higher than that. I've been up to 21%. But in the current situation at the moment, the stock market's sort of been down. So it's gone down a little bit, but I'm expecting by the end of the year for that to return to around 25%, hopefully, is my target by the end of the year. I hope you found that insight into my portfolio helpful. I've tried to make it as transparent as I could to show you guys what I'm currently trading in. Thanks for supporting the channel, and hopefully I'll see you all in my next video.